And this is why you don't invest in leveraged investments. Oh my goodness, I can't believe this. Can't believe this. Anyway, so a guy emailed me today, and he had 1.6 million in this leverage fund, which I'll share with you here in just a second. And it's now down to $700,000. And I'm like, oh, a long time ago, I felt for the leverage stuff too. I did, man. So they have these S&P 500 funds. They give you 2 times the S&P 500. And you're thinking, well, if the S&P 500 goes up 12%, I should go up 24%. It doesn't work like that. It's a daily thing. It's a daily price. So anyway, let me check this out. To the NASDAQ Pro Funds Ultra NASDAQ 100 Pro Fund Investor. And what is that, you might ask? I mean, look, it's up 23.98% so far this year. I don't even know what NASDAQ's up this year. I don't know. Anyway, I guess we can look at it. I literally could care less. So anyway, so check this out. What does it do? The fund seeks daily investment results before fees and expenses. And there's a fees, it's on an annualized basis, I grant you. But daily investment results before fees and expenses that correspond to 2 times the return of the NASDAQ for a single day. All right, so if NASDAQ is up 1%, you'll get 2%. Before fees and expenses. If NASDAQ is down 1%, you'll be down 2% before fees and expenses. So, okay, that's a risk I can take. Oh, it isn't now. So let's see what the returns on this guy have been. Here's what do we? Look at that, negative alpha. I mean, look at negative alpha. People still invest in this thing. It's crazy. They got what, 500 million bucks in here or something? 466 million bucks in this fund, and they're up 100% for the 5-year return. Oh, really? Check this out. Whoa! Look at that. So you put $10,000 in the NASDAQ Pro Funds Ultra in 1997. By the end of 2000, March 2000, which is when the NASDAQ hit the peak at 503 or 507, 5007, I think it was. Your $10,000 is worth 123. From March 31, 2000 to freaking September. I mean, and it did nothing here. It did literally nothing. It went from freaking. Let's make this log so it makes it even. You can see a little bit more. All right, so we log it. So it did from one. I can't get over this. You went from 10,000 to 120, and all the way down within literally a year's time, roughly, maybe 2 years, 2.5 years. What, 2,000? Yeah, 2.5 years time to $1,700. And you stayed at $1,700 until right here in 2007. You're at $7,000, and then you went down to $1,900. I mean. And now you're up to what, $87,000. That's great, $87,000. But I mean, look at that, dude. I mean, and now we were at 183, and now we're down to 87. We've lost $100,000 in the course of friggin' 15 months. Look at that, man. Because it's hey, what's up, though? What you lost? I mean. When did you invest in this guy? Right here? No. In fact, let's go 2009 to, let's see, we'll go to 2009. You can't invest in leverage stuff, dude. It's freaking nuts. So I'm wondering when my guy put his money in there. Let's see. 2009. So 2009, compounded annual growth rate of 30%. And you're like, yeah, dude, compounded annual growth rate of 30%. That's friggin' smoking it. And let's see, do we give alpha on here? I see a Sharpe ratio. Let's see. Hold on a second. Our alpha, which is actually quite good, 4.82% a year for the last 15 years or so. That's quite good. That's just a fact. But go back here. When did you actually invest? I mean, invested right there, you made money. I bet you didn't. I bet you didn't invest right there and hold tight. I bet many. So let's go here to November. Let's go to 2021 and see what the freaking annual returns have been. 2021. Look, leverage is all fake, dude. I mean, it's speculation. You can get look at that, 41% compounded annual growth rate. That's insane. $10,000 to freaking $945,000. Let's just compare that to VTI. That's insane. And you're literally, it's just leverage. Leverage can work, but you don't do that in retirement. You don't do that. So look, your portfolio. Look at that. The Nasdaq 100 shares grew from freaking $10,000 to $945,000. The total stock index grew from 10,000 to 69,000 bucks. But it's just, I can't. Oh my goodness. But Josh, if you would have sold, when did you actually buy though? Let's see, that's the issue. When did you actually buy this? And let's see what's done since. So now we're down to 442, and you're at 58. And the total stock index at 58. So now you're down. You've lost half your money essentially. You're at what, 900? Yeah, you lost more than half. You're down literally 50%. But you're still way ahead. If you were over here when you bought it, how many people do you think bought it in 2008, dude? I don't know what this guy, but he had 1.7 million in it. So I assume that means, hopefully that he got, he started, let's see, 1.7. I hope he's like down here and it grew. You know what I'm saying? I hope he said, I bought it in 2015. I hope he did. Let's see over the last 5 years. I bet he did. Last 5 years. So the last look at that run right there. So 10,000 invested in 2015 was worth twice that of the the total stock index, and then it went freaking nuts. I bet he bought it right there. I bet he bought it right up in here. I wish it was too long. I wish they had a thing to see like that flows into that fund. I wonder if it does. Let's see. Hold on a second. I think for the actual flows, the cash flows, how much money they was invested in this fund. I don't feel like researching. It'd be interesting to see how much people flew into it after it had that incredible year it's almost like Bitcoin. After it had the incredible run for 2020. You take out that incredible run of 2020, there's nothing there, dude. It's not. It did a little bit better, I grant you. Leverage can work. When you buy a house, you're leveraging your house. I talk about this all the time. It can work, but the thing about a house is a place to live in. But look, just look at this drawdown. Look. You lost half your money, man. So you got the bad gains on the upside because of the leverage. And when I mean bad, they're fake, unless you sold. You got these gains right here on the upside from 2020 to here. You freaking made a boatload of money. Look at that. Look at these returns from 2019 and 20. Oh my goodness, I can't believe people fall for this. 80% in 2019, 86% in 2020, and then you probably threw all your money in there. And here you're like, I still got 52. Oh, kaboom. Let's see what if you invested in 2020, what it'd be worth right now. Let's take a look. Because the vast majority of people did that in 2020. Yeah, now you're, Anyway, so he said he had 1.7 million. I hope he started with 800,000, went to 1.7 million, and now it's down. You're playing with fire when you're dealing with leverage, dudes. No one was investing in this fund. Let's just go back to his histoire. No one was investing in this fund in 1997 when it started. Let's go to analyze. I don't think VTI was around back then. Was it VTI? 97. When did they roll VTI out? I can't remember. Anyway, so here's which one's which? Which one's which? The VTI is the red. So here's a VTI. So okay, we're gonna start in 2002. That's when 2002 is when VTI came out. Anyway, no one invested in the blue until right here. And they're even right here, you're going to say, what? So let's go to 2000. We'll go to 1997. There we go. And we'll get rid of VTI. Just check this out. 1997 to 2009. And we'll see what the compounded annual growth rate was then. And let's take a gander. Compounded annual growth rate those time was down 6.77. And people no one was investing in this because the NASDAQ got smoked, dude. And now when you have a freaking run, look at that. When you have a huge run up like we've had in 2019 and 20, that's when everyone starts throwing their money to it. Oh man, I mean, do what you got to do, man. Nuts to me. The market will always come back. And I'm like, yeah, but now you're down half what you were. And I guarantee you didn't invest in 2000. I'm not talking this guy specifically. I'm just saying generally speaking. You didn't invest in it, but you didn't invest in 2015. Some people did invest in Bitcoin. Some people did, and they're doing pretty good right now. Even though Bitcoin's down to what 20,000 or something like that, they still invested was friggin' 3,500. They're doing good. Why didn't it sell at 66? I don't know, but some people made back. That's just a fact. But the vast majority of people didn't invest in it in 2015. They waited until the numbers showed up in 2019 and 20 and invested then, and now they got swamped. You can't chase the numbers, man. Yeah, because it always, especially when it comes to leverage. If there's a positive for leverage, there's negative for leverage, which is the downside risk is accelerated, just like the upside gains are. And if you got the upside gains and you haven't sold to take advantage of locking some gains, man. All right, we'll see. Love your thoughts. Bye.